Hello, welcome to the top business stories of 2022. Joining us now is BNN Bloomberg's Andrew Bell. Andrew, thanks for joining us.
Morella, thanks for having me.
For Canadians, this year very much defined by the double I, the inflation, interest rates. 7 hikes to bring inflation down. Did the Bank of Canada need to be so aggressive?
Certainly the economy has slowed. In the third quarter, we were down to economic growth of just under 3%. The International Monetary Fund, at its latest forecast, says we're not going into a recession, but it sees pretty lackluster, let's call it meh growth for the next 2 years, below 2% economic expansion in 2023 and again in 2024. So we don't have an economy that's crippled, but it is showing signs of slowing. And interestingly, in the third quarter, household spending dropped. And that was the first time it had happened since 2021. So there's no doubt that these higher borrowing costs are hurting consumers and they have them worried.
Canadians paying so much more on those variable mortgages, as you know. So would you say the hikes are working the way they should, as quickly as they should?
Well, it's so tricky. I mean, we have an economy with an annual output of about $2 trillion. I mean, it's really pretty amazing. $2 million US. So it's a complex organization. So I know we often make fun of central bankers for their convoluted pronouncements, but it's a very difficult job they have, trying to adjust a very fine machine, complicated, vast machine like that. They don't know when to stop raising interest rates. And the weird thing is they often find themselves saying, OK, we're done with the interest rate hikes while inflation is still high. The housing market, and it's hard to generalize about the housing market because obviously somewhere in Saskatchewan is very different from Toronto in terms of housing conditions. But the housing market is down about 10% from its peak. But there's still a lot of speculative excess in there because, as you know, young people in many centres across the country can't afford houses. So housing prices are still very high relative to incomes. OK,
let's get to other prices. Groceries, of course, have shot up, costing us all dearly. Commodities, the price of gas, seesawing constantly. What's been feeding into that?
Well, after the brutal attack on Ukraine in February 24th, oil shot up and lots of commodities shot up because people were worried. They said, well, Russia's going to face sanctions and these supplies will be cut off. Didn't happen. In fact, sanctions were not put on Russian food or fertilizer exports or even aluminum sales into the United States. Oil did go up, though, sharply. It went up to about $120 US. Then it eased off through the spring. Then it shot up again in the summer to 120. But by this month, oil had gone way down to below $75 US because it looks as though sure, the world is anxious to try to keep some of Mr. Putin's oil off the market, but not all of it. So vast amounts of Russian crude are still coming onto the market. There has been a drop in Russian exports, but not nearly as much as you might think from the politicians' rhetoric. So gas prices did go up. They went well above $2 a litre in some places, but they have come down decisively.
OK, the Russian oil is still out there, but now there is a cap on the price of oil, a recent OPEC decision as well to keep the scale back going. What can we expect for 2023?
Well, the $60 cap on Russian oil, I mean, it sounds good given that oil is still above $70, but it's seen as a bit of a cop-out. Certainly the Prime Minister of Estonia, for example, said, this is ridiculous. We should be capping Russian oil at $30 to $40. OPEC has been tough. I mean, they haven't agreed to increase production, much to President Biden's disgust. They even announced massive cutbacks during the year. But the reality is they're not even producing their quota. A lot of countries, especially during COVID, let their oil industry just rot. They couldn't raise capital to actually maintain the stuff. The weird thing about the oil industry generally, with the exception of the oil sands, your wells keep running out, so you have to keep pouring capital in, and they didn't do that during the pandemic. So the outlook for oil really is linked to the economy. There's no doubt that we're going to see some kind of an economic slowdown next year, especially in Europe, where inflation is likely to stay high, partly because there are big energy bills. That is going to put pressure on oil prices. But making any kind of definite prediction about oil is a mug's game.
OK, let's make a prediction about something else that's hard to predict, the market, because Canadians right now too afraid to look at the portfolio, right? I mean,
Yeah.
things have been nuts. Did you see a pattern in the way things went this year?
Yeah, well, tech was the big loser. There's no doubt. Tech went crazy. It peaked in November of 2021, and it's been pretty well straight down from there for huge stocks like Meta. Our market is fascinating. As of early this month, our market was down, the Toronto market, down about 6% in 2022. Actually, not that bad. That's a lot better than America. They were down about 16% because they have so much more tech. But 2/3 of our loss was just because of Shopify, the internet darling. It is a wonderful company. It enables hundreds of thousands of merchants to easily sell stuff over the internet. But a lot of errors come out of those tech stocks. Without that drop in Shopify, our market would be down only about 2%. So the TSX has hung in there pretty well. But a lot of Canadians, of course, own the big American stocks, and the American market is down about 16, or was as of early this month, down about 16, 17%.
Got it. Andrew Belser, thanks for joining us.
Thanks a million, Marella.
And thanks for watching the top business stories of 2022. Happy holidays.